Good evening and welcome to tonight's member-only webinar where we look at ASX investment opportunities in review for the 26th of September. The advice provided this evening is general advice only. Investor Signals provides a platinum member service which includes mentoring and education across the subjects on screen there. We have a discounted offer available. The price increase has already occurred, so the normal value is $10,800, and for a limited time you can join as a platinum member for $6,890. If you'd like to know more about the platinum membership, please give me a call on 1300 614 002. The products that we provide are the research, brokerage and managed fund. Visit our website to learn more about those. As we covered in the last recording, I started to break up the conversation to be clear about the difference between portfolio investing and momentum trading. And portfolio investing, just to recap, our approach is growth at a reasonable price, so we're looking to enter the market within a range of value rather than necessarily a precise level. We're attracted to dividends, we're looking at forward earnings, making sure that debt and gearing levels are reasonable, and obviously taking into account macroeconomic analysis. But in saying that, all of that's being driven around the backdrop of what the algorithm engine is saying. So those key algorithm buy and sell signals to generate some sell side discipline in the portfolios. The personal investor account service is where obviously I manage the broking account for you. We'll soon have the September quarter performance data updated here. 5-year averages are running at reasonable levels, and we'll soon see what the September quarter numbers are like, and I'll update you on that. Now, momentum trading, this fills a request from clients to capture more short-term trading opportunities in the market, so looking at days and weeks rather than months and years. So the tools that we utilize to help with the momentum trading is predominantly the pivot point table. So I'll touch on this evening. We'll have a look at what the pivot point table is telling us, and just a reminder, the focus across the different sectors of the ASX, and also incorporating the charting component with the key pivot point reversals are tools to assist with that momentum trading, and all of that's all captured in that platinum membership where we work with you to identify exactly what area of the market or strategy you're wanting to improve your skills in, and then we start the education and mentoring around that. One of the areas that is becoming popular is clients following our index trading. So this could be executed through futures, CFDs or exchange traded funds, but you'll starting to notice the consistency on the blog, the commentary around the S&P 500 and the XJO index, and the highlighted entry signals both on the short and the long side. So if you have any questions around that, again, please don't hesitate to give me a call in the office, and happy to walk you through sort of that some of those new approaches around momentum trading. Okay, with that, let's jump straight into the analysis of the market and have a look at what's going on here. The correction in the Nasdaq continues to make lower lows, lower highs. We have a retest of the June low and the price actions below the 10-day average. So if we look at that in the S&P, which is where we spend more of our time providing the analysis as this on the S&P 500 and the XJO, but essentially what we have happening here is again lower lows, lower highs. You can see this reflected in the red and green arrows making lower lows, lower highs. So we had this pivot high here and then the break below the 10-day average, and that set up the short trade on the index for us. The market did pierce back through and stopped out again, and then back on the short side again there below the moving average. Where we sit at the moment is we had some life in the market as far as buying goes late in Friday's session. The market rallied off the lows. And what we now have is this green arrow present. So that would be the first sign to say start having to think about closing out some short positions. But really the trigger would be being patient and waiting for the price action to get back above that 10-day average before you started to shut out any short index exposure. On the XJO, the pattern's quite similar. We're seeing the pivot point arrows make lower lows, lower highs. We had the pivot high there, the close below the 10-day average. It pierced back above it and then again closed back below within a couple of days, so confirming that downside momentum, and the price action remains below the 10-day average. We now have this green pivot arrow, which would be the first, again, recognition that some buying could be starting to come back into the market. We're about to retest the June lows. The stochastic's still pointing lower, so you would be watching for this to turn higher, but ultimately wanting to see the price action trade back above that 10-day average before getting too bullish on the market. At an individual stock level, it's a different story. There's buying opportunities in the market. What I've just done there for you is run through index analysis. Let's have a look at what's gone on the blog. Endeavour Group, so I still maintain that in a volatile market, this is a company that can deliver reasonably robust earnings. So the sell-off down here into this sort of $6.75 to $7 range is attractive. So if you don't already hold this in the portfolio, that's one that I'd suggest you add to your list. Sonic Healthcare, still the healthcare sector is our preferred overweight sector at the moment. If you think back over the last number of months, generally the message has been get out of resources, and we've been moving into the healthcare. Not that that's provided a complete defensive position to the market, but it's certainly reduced the losses that we've seen in resources, and there may be further downside in that sector. So healthcare is attractive. Sonic Healthcare down here at around $29.50. If you don't already own it, start thinking about adding that to your portfolio. CSL again in the healthcare space. We've been patiently watching this over the last year or two, tracking sideways, waiting for the new higher low formation to occur. We now have that at around this 270, 280 level, and we added that into client portfolios today. The materials index, so this picks up that theme that we've just been cautious on. Obviously, we've seen it reflected in sell signals across most of the major resource stocks, but this is essentially the pattern that the algorithm's picking up, the rollover, the lower low, lower high, and as we go through some of the top 50 stocks, we'll recognise some of that weakness in the index level. In the materials sector. I won't spend too much time on this evening. If you have an interest in the index analysis and how you would execute orders, whether it be in the futures market, CFDs or ETFs, please just give me a call and I'll work through this analysis. But if we jump down to today, the most current picture here is essentially what we're looking at the beginning of the recording. The lower lows, lower highs, the resistance, the price action below the moving average. Likewise with the XJO. If we go down to the bottom here, have a look at the most current post here. Overhead resistance with price action below that moving average, and the stochastic still trending down. AZJ's one to just have a think about down here at around this 350 level near support. Telstra, I've created a fairly wide band there as a range to think about accumulating that. Again, this is more for investment portfolios than trading. Metcash, I think that's reasonably defensive and holding up okay in a fairly difficult market. Transurban, this has sold off more than I expected. Obviously what we've seen is bond yield spike much higher over the last few weeks, and that's put pressure on some of these yield sensitive names, so real estate investment trusts and infrastructure as two examples. But the base case still is that ultimately inflation starts to come down. We start to see softer inflation reads over the coming months, and these names can rally, and ultimately the market as well. So Transurban, being a buyer of that on this dip, is something that I would suggest. Amcor down here at around 16.50, comfortable with that. And global quality leaders, this is really just a way of getting broad-based exposure to global companies that have been sold off quite heavily over the last 6 months. It's one, just if you're interested in ETFs, start to have a closer look at that. Gives you an idea of the holdings you're getting exposure to there. So that pretty much captures the blog from the last recording. What I wanted to do tonight is jump into the watch list. We're going to go through the ASX top 50 tonight, and I've marked out a group of stocks that I think you should be focusing your efforts on, and a couple of ETFs. The way that we'll look at the market tonight, given the downside pressure, is we'll get the worst performing stocks to the top, and then we'll organise them so that we're looking at the stocks that are underperforming, that are under sell signals, and then I'll work the way through the list and we'll get to a point where they shift from sell into buy. So the common theme among the sell signals is the downside pressure in the resource names. Mineral resources is a little bit unique. I think we're getting within this sell-off. I'd be surprised to see this take out the $40 low. I suspect we get down into maybe the mid-50s here, and we see an algorithm buy signal for mineral resources, and I'd certainly be willing to look to add that into portfolios at or near that level. So that's something to keep an eye out for. South 32, a bit more cautious here. I think you can clearly see the patterns rolled over a lot more. Lower lows, lower highs, overhead resistance there at 450. We've taken profit on this and closed it out from our top 50 model portfolio or client portfolios, and to me, this looks like it has further downside, so not a stock that doing too much there on. Rio, we can see there that the algorithms shift from buy signals into sell, making lower lows, lower highs, and possibly trending down to slightly lower levels. Likewise with BlueScope, this has been removed from the portfolio, algorithm sell signal, and it's really just picking up that rollover from the uptrend into the downtrend there for BlueScope. BHP, under sell signal, lower lows, lower highs, overhead resistance there at around $42. Fortescue, similar pattern, lower lows, lower highs, last algorithm sell signal higher, and an algorithm buy signal. It may be 3 to 5 months away, but that's one just to keep in the back of your mind. Dexus under sell signal here, we can see it's rolled over. The algorithm sell signals flagged that 950 top there. QBE under sell signal, holding up reasonably well, as is most of the insurance companies, not just in Australia but also in the US. QBE, but nevertheless, though, under resistance at $13 and not doing anything there at the moment. Qantas, so we've closed this out from our portfolio after it being under algorithm buy signals. It was closed out, overhead resistance there at around that 550. Stockland's under sell signal, overhead resistance there at 430. ANZ, so under algorithm sell signal, resistance there at around that 2440, 2450. Mirvac under sell conditions, so that's been removed from the portfolio, overhead resistance there at around 220. Macquarie, this has been removed from the portfolio, so overhead resistance there at around 180. Medibank, so again, this might be one worth pausing and just having a think about what the signals are likely to suggest in the months ahead. I think this pullback down here to maybe around this 330 level, we start to see this shift to algorithm buy signals, so that will be one that we'll keep an eye on over the coming weeks. Westpac remains under sell conditions, so overhead resistance there, lower lows, lower highs, so Westpac moving lower. Suncorp moving lower under algorithm sell signal, so 1250 resistance there, and then another sort of lower high pattern there at around 1170. But generally, we've been quite cautious around these banks for the most part of this year, and we're seeing those downtrends continue to develop. Now, Brambles, again, let's pause and have a think about what's likely to play out here. This sell-off, Brambles delivered an earnings result that surprised to the upside, came in above analyst expectations. So this sell-off that we get, I suspect somewhere down here at around $11, we'll see an algorithm buy signal. So there's a couple of names there that I've flagged for you that you should be making a note of, and in preparation for the algorithm engine shifting to buy signals in the near future. Goodman Group, after being a star performer for quite some time, one of the better performing stocks in the model portfolio, it was recently removed at around date-wise around the beginning of August. The pattern there, obviously what we've seen is the rollover into lower lows, lower highs, so that's created the sell signal. Still a fabulous business, but just in a higher interest rate environment, we're seeing pressure on that. I suspect that maybe somewhere down here at around $15 we start to get into a level where it finds support. My base case still is that the inflation reads start to come down and some of this sort of pressure on yield sensitive names starts to ease in the coming weeks and months. And I suspect we're sort of within 4 to 8 weeks away from seeing some of this inflation data come back down and some of the panic in the market ease. So that's Goodman Group. Insurance Australia Group, again, the insurance stocks mostly held up all right over the course of this year, and we looked at a similar pattern there with QBE. So I suspect Insurance Australia Group probably breaks out and starts another uptrend over the coming sort of 3 to 6 months, and we see that added into the portfolio. CBA under sell signal, lower lows, lower highs, so there's no pattern in these banks at the moment that's drawing our investor interest to those. So CBA under sell signal, likewise there with NAB. Centre Group, so the REIT sector still a little bit tough with these interest rates moving higher. James Hardie, probably for the most part the correction in James Hardie's getting pretty close to being done, but certainly not under buy conditions yet. Aristocrat, again, reasonably attractive earnings profile. Downside's probably pretty limited, but just highlighting that it is under sell signal. Wesfarmers, again, high quality business. Really like the outlook on this over sort of a multi-year perspective, and probably good value down here where it is at the moment, but it is under algorithm sell signals with the overhead signal there flagging the lower lows, lower highs. Woolworths, so overhead resistance there. We had the sell signals up here and the stocks move lower again. Downside's probably fairly limited, but the algorithm did do a good job of warning there. ResMed under sell signals, so not our preferred healthcare play at the moment. Seek under algorithm sell signal, so we can see the lower low, lower high there in Seek. Following the sell signal, the stocks moved considerably lower. Zero under sell signals, so that's been removed from the portfolio. Santos, so now what's happened, we've shifted into stocks that are under buy conditions. So let's start the discussion around do you own these in the portfolio, and if not, is now the time to start looking at adding them. Within the energy space, I'd still point you towards Woodside Petroleum as a preferred exposure, but Santos, I expect we're getting down to a level where within this range of $6 to sort of $7, you could start to have a think about adding that to your portfolio, but only in small increments. Northern Star, there's been no buying interest in gold as the US dollar's pushed higher and US interest rates have moved higher. There's been very little interest in the gold price or gold stocks, but it is an area of the market that will recover in the coming months as those inflation reading points start to come down again. So just be patient and keep some gold exposure in your portfolio. So Northern Star's our preference. Origin, I'm thinking maybe down there at around that sub $5, between sort of $4.50 and sub $5 it finds buying interest. So Santos, Origin, I'll update you on the blog as I think they get to a point where you might want to look at adding those to your portfolios. Newcrest Mining, oversold down here, probably not likely to rally immediately, but again over the next weeks and months, as we see these inflation numbers start to come back down, gold should start to perform, and you want to be positioned in that. Woodside Petroleum, so if you don't already own this, where's the entry level? So first of all, I'd say maybe something down here at around this $27 to maybe $29 becomes the range. So I'll just shift these into position and add another line here for us to focus on. So looking at something sort of within this range here as a start is where I'd start to have a look at Woodside Petroleum. So we've indicated there really is on the downside as low as 26 and on the upside here in around 29.50. We'll start to watch the price action there. Certainly watch the stochastic. Not only will this set up an investment opportunity, but it may be a very good trade to add to your watch list in anticipation of it getting maybe a little bit oversold. Ramsay Healthcare, we've seen KKR walk away from the takeover offer. We have to just simply now wait and see whether there's another suitor that's interested in the business. Holding this in portfolios, I suppose we knew the risk that the takeover was not guaranteed, but the underlying business and the reasonable dividend yield still makes it attractive. And all we can do is just be patient here, collect the dividend, and look for a recovery there in Ramsay. If you don't own Ramsay or at the moment at these levels, I would suggest that it's something that you start accumulating. GPT not doing it there at the moment. APA Group, again, think about adding this to your watch list if you don't already own it. The correction down here to sub $10. So this is an example, just like the real estate investment trusts or the infrastructure names. These are yield sensitive businesses that are struggling in this high interest rate environment, and it's not until that inflation read numbers start to come down that you'll see buying interest move into these, but just keep an eye on them. I think APA back down around this 950 starts to look attractive. Telstra, as indicated on the blog, within that range there, you're starting to get some value appear there in Telstra. You can think about that. Computershare not doing there at the moment. ASX, clearly volumes in the market are going to be a little bit quieter at the moment, but it's extremely high quality business. Again, slightly impacted from higher interest rates given the PE that the stock trades on and the reasonably low dividend yield. But you can see there I've created an accumulation range. So if you don't own this, think about it within that range. As always, it doesn't hurt to just be patient and wait for the price action to get back above that 10-day average there. Amcor back down here at around this 1650 seems reasonable value to me, and happy to start looking at adding that into portfolios. Now all of these we already own. It's just a matter of the adjustment to the weightings for us in the portfolios, based on how deep the value offer is in the stock at the moment. But Treasury Wines, this has been one of our sort of top portfolio weighted stocks, continues to perform well. If you don't own it, the correction back down to around $12 gives you a level there to start to have a think about. And Endeavour Group, so this starts to move up the weightings in our portfolio. It started off as a very, very small exposure, and it's now moving up to sort of within the top five stocks or so, or at least in the top 8 stocks of the portfolio. So we're starting to build the position size there and see support there at around that 675. So that might be one for you to have a look at. Transurban, again, yield sensitive, so be careful, but we are anticipating that softer inflation data, which will start to add some support to some of these oversold yield sensitive names. Sonic Healthcare down here at sub $30. We think that's a buying opportunity. Coles, probably not a lot in the way of upside, but we're getting pretty close to support there in Coles at around $16, so think about buying that. And CSL, this is a new stock that's added into the model portfolio under algorithm buy signals there. And so think about adding that. Cochlear, so these are the healthcare stocks that we like: Sonic, Cochlear, CSL. all now making up part of our portfolio, so Cochlear at around that level. So just to have a quick look at the top 50 model portfolio and stocks that have recently been added. So you can see there CSL's been recently added, ASX, so these are mostly what we've covered this evening, stocks that are under buy conditions, and that's where you want to be focusing your decision making around your portfolio, and obviously trying to ensure that you're not owning too many stocks that are under algorithm sell conditions. Just to finish this evening, let's just have a look at a couple of stocks. This one here caught my eye today. I haven't added it into our portfolios yet, but Aurora, keep an eye on that. I think down here at around $3 could be getting down to a level where it's a little oversold. I'd consider this more of a trade than necessarily a core investment in the portfolio. So what you want to be doing here is watching the stochastic, maybe just being patient, waiting for a first test, first fail, or even waiting for the price action to get above that moving average. So that'll be one that I'll keep you updated on the blog. Now on the ETF side, still continue to see opportunity in the IAA as being extremely oversold, as I do with the emerging markets, and these are all a play on that inflation data coming down, US dollar easing, and global funds essentially coming out of US dollars moving in to these markets and meaning the emerging markets there. So the IEM is something to have a think about. That's getting oversold, and likewise South Korea. I think the IKO is something to keep on your watch list. Now they're long-term macro themes that when they turn, the uptrend will last for a significant amount of time. So not really short-term trades; they're more longer-term macro positioning of long-term positions in the portfolio. Okay, so now momentum trading. Let's finish this evening with a little discussion on that. The pivot table is the tool that we've created to assist you with short-term trading. So let's just spend a couple of minutes to have a look at how this works. So the pivot table looks at your long signals and your short signals, and then filters them for the pivot point arrows and the moving average cross. So if we apply that to the top 50 and just have a look at what some examples here. So what it's saying is there's nothing under long signal at the moment that also has a positive pivot point and the price action is above the moving average. So we would think about that as a reversal or a key reversal in the momentum of the stock. So we're not seeing that in any top 50 stocks at the moment. What we are seeing is a continuation of stocks under short signals that have the negative pivot point and the negative arrow. So let's just have a look at an example of that. So here in ANZ, you've got the sell signal, you've got the red arrow, and you've got the price action below the moving average. Brambles, same thing, sell signal, red arrow, price action below the moving average. Mineral Resources, primary sell, red arrow, below the moving average. So where you would look to take advantage of these signals would be more likely to be periods where it's tying in with the index analysis. And let's just see if we can bring this in. So what you're looking to do is tie that pivot point table into where you're getting periods on the index analysis where you're at key inflection points. You would be shifting your focus from long to short term trading, and then likewise, obviously, if we were to see bullish patterns develop, you would then be focusing your pivot point table analysis on the long signals. Another way of thinking about that is when you come into this pivot point table, if there's nothing on this side and everything on this side, there's a good chance that the market's under downside pressure. So that should help to shape your thinking regarding your short-term momentum trading. So thank you for listening in to tonight, and if you would like to discuss either the momentum trading, the index trading analysis, then please don't hesitate to give me a call, and happy to work through the value that's offered as part of the Platinum membership and discuss more about the education and mentoring. Thank you for listening in. I look forward to speaking again next week.